let's have a look at WTI. These charts are not live, so we went long on WTI at the bottom here on Friday, so I can put another red arrow in here. This will be the first time we've been long on WTI, actually, since, as if I might be wrong on this, those in my private group can let me know, but I don't think we've been long, at least certainly for the last year or so. Definitely not for the last year, maybe a couple of years before that, but we haven't been long for a very long time. Now so that means I'm going to put in a green arrow marker up. We've got our first green arrow right there at the bottom of that trend line. And so this is what I'm hoping for on oil. And this chart is not live, it's the weekend, so it's not moving. I'm bearish on oil, by the way. This is a counter trend trade, therefore it requires less size and more caution and less optimism about the outcome of the trade. But because it's a small trade and because I do think we need a bounce, there's a super key level on WTI right down here. We've got a triple bottom. It's actually easier. This is a day chart. It's actually easier seen on Brent Crude, as I pointed out in the last video. And let's have a look at this. And let's just zoom right in. Right, so there's Brent Crude. Maybe a weekly chart would be more helpful. We'll go back to WTI. This is the weekly chart on Brent Crude. What a flaw. This goes back to 2021. What a massive flaw we have here on Brent Crude. So the interesting thing about this, you might look at this and say, well, there's support there. We're going long. I have gone long. And I have looked at support there. But look at this weekly chart picture. It's not good at all. It's terrible. Let's get rid of this. We don't need this anymore. This is a really bad chart. And I'm going to draw a trend line in here, right from this top, when everyone is going, oil's going to $250. We started getting short at 100, and we remained short. And we took a couple of stops out on here in this big surge, where we got short very quickly. We remained short from 100. We haven't been long since then. But if I draw a trend line from that high all the way down, in fact, it's not the best trend line, but we do have 3 touches, even though there's some gaps in between. Don't really like that trend line. I think I can draw a better one by pulling it down to this level here, where we've got 2 candles touching it. So now we've got 2 touches there. Once again, not the best trend line, but a little bit better than the previous one. And we've got this downward sloping trend line with a flat bottom. Now, if you are a technical trader, which I am, although not as technical as most people possibly, I like to look at all sorts of things on my charts. But if you are a technical trader, you'll recognize this very, very in a very familiar manner. In fact, what I'm going to do, because this chart doesn't go back long enough, is I'm going to look for Brent Crude on a different ticker, which might, and I don't know which one to look at. Let's try Oanda. Oanda's data goes back an enormous long time. We've broken down below. Okay, this is a better chart. This is a weekly chart on Brent Crude oil over at Oanda, one of the other brokers that I use. The last time we broke below the 200 period moving average on Brent Crude oil was in 2021. In fact, the last time we actually broke through it for the first time on the move down was in 2020, January 2020, so a long time ago. And we broke back above it. We've traded above it ever since, and we've now broken and closed above it weeks and weeks and weeks in a row. Look at that moving average conference, very, very bearish. And if I draw that trend line onto this chart like I had on the other one, which is not the best chart, we've got a better one here on Oanda. Black Bull data doesn't go back all that far. And then I draw this flat bottom on here that we saw on the other chart. What we have here is a descending triangle. And a descending triangle, about 75% of the time, will break out to the downside. And the fact that that support line that we've held on, this is weeks, by the way, weeks, not days or hours. Once, twice, 3 times, 4 times, 5 times, 6 times, 7 times. And now the 8th time. Normally, a trend line or a horizontal bottom won't last that long. I'm surprised this one has. I know why we've lasted this long. It's because we've had all sorts of problems going on in the Ukraine and in the Middle East, and that's kept this unnecessarily high. Now that might be resolving, maybe, with a Trump presidency coming in, maybe, or a more reasonable Harris and whatever the other guy's name is. Can't remember his name. I never can. Don't like him very much. That's probably why I can't remember his name. But maybe they will have a change in direction on the Middle East and Ukraine as well. Unlikely, but you never know. But nevertheless, that's probably what's kept this oil price above this trend line and held it above the 200 period moving average quite a long time. But we're below that trend line. We're below all the moving averages. We're testing this bottom, testing it forcefully. I'm looking for a little bounce up to 74,000. That's all. Up to the underside of these two candles. I'll draw a line in there just to help you out with this too. Just a little bounce. Actually, let's do it like this. And then we will be back short again. So what am I looking for? The brush. So I'm looking for a little bounce to this area here. Okay, that tweezer bottom, swing low. It's also that swing low. It's also this conglomeration area here. And that's like 76,000. Yeah, so somewhere around 74 to 76,000, something like that. Looking for a bounce from here up to that level. And then for the next move down, a final break and close beneath this horizontal bottom at about 72. This is Brent crude oil on Oranda. The same applies to WTI. So because that's a neater chart, that's why I looked at that chart. But the same applies to WTI. Let's have a look at this on the weekly chart. And exactly the same thing. All of these weekly bottoms, 1, 2, 3, 4, 5, 6, 7, 8, 9, blah, 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 blah. Not as neat as Brent crude, and a broader area beneath us, which means that we have to allow for a bit more fiddling around and faffing around in this bigger, broader area. Brent crude has got a very clean and perfect, neat horizontal support line within that downward descending triangle, which is more likely to break down than up. Keep that in mind. So if we do bounce on here, these are the levels that I'm looking for, this downward sloping channel, perhaps these lows here at about 70. Well, here on WTI, it's about 73 to 75 in that region there where this downward sloping trend line is, and the channel and the Fibonacci retracement number and these previous undercut lows. Once we get going, my target is the bottom of this red channel and a continuation of the green channel. That'll take us initially down to about 55,000 on Brent crude, somewhere down these swing lows down here at this area here, the bottom of this green block, 60,000 down a bit, down into the 50s, and then eventually a full retracement down into some of these where I want to put this on Oranda as well, but I'm not going to bother for now because we are running out of time. Only 10 minutes left before the natural gas premiere begins, but same sort of idea. That's why I like to look at Brent crude, because this is not such a neat chart. Generally tends to be a more scrappy chart. Brent crude gives you a very clear technical picture. This one, WTI, gives you a slightly more messy one, but that's why I keep both of them. So that's the weekly chart. What are we doing on the 4 hour? Well, we went long there. This chart is not live, but we are long and looking for that move. And, you know, if we don't get to the top of the channel, not quite get there, maybe we'll only get up to these moving averages, maybe this level here, this green level, about 72 or 73. We're now trading at 68. So maybe there's $3 or $4 or $5 in this trade long. It's not a full size position. As I said earlier, this is a counter trend trade. The direction is short very clearly based on the longer term charts. And so we're just taking this for a little nibble, little gamble in the long direction to set us up for the short. There's the 200 period moving average, the 100, the 50, the 20, maybe up around about the 200 on this 4 hour chart. On the daily chart, and that's at around about, hang on, let's just go back to the 4 hour chart. So up around about here, 75 or so, the moving average. Go back to the daily chart just to see where that is on the daily in relation to the other. And it's where the daily 20 period, also look at this on the daily chart. When you get so far away from the 20 period moving average, there's the 20, and that's at about the area that we're aiming for. So when you get such a long way away from the 20, you expect that this will retrace at least a little bit towards it. However, we are long, and if we don't bounce here, we have bounced a little bit already. We've bounced up to 68.50 already. If we are long here, but if we don't bounce, we don't carry on when this market opens tonight and earlier into next week, and it keeps on moving down, I will immediately hedge my long position on WTI and add more than the long side to the short side. In other words, I will reverse hedge it and turn it into a short with a hedge to the long side rather than a long with a hedge to the downside, if you know what I mean. In other words, I'll add more shorts on than I'm currently holding long, because I do want to be short and I don't want to miss out on that move down. So that's WTI. I hope that was helpful. We've done really well on oil. We've traded short over and over and over again, time and time again. And natural gas, well, I'm not going to talk about it in this video because in about 8 minutes time, the natural gas video will start. But there's that order block we talked about. Wait for the video to come up. It's super interesting. We've got to close above there on the 4-hour. We've got to close above there on the daily chart. And we've got to close above there on the weekly chart as well. And that's all set to go. And I'm looking forward to this actually moving up eventually and moving up into the 3s and beyond that. What's very interesting here is that on this pullback here, look at the structure compared to the last time on the weekly chart we got down into that level. Almost identical. Let me just show you this, and I could actually just take this. Let's do this while we're here. This is natural gas, and we're talking about it too early because we've got a thing coming up right now, but this is a little bit more information than you will have got. So this moved down to that triple bottom. Let's just try and capture this. And then, so this entire move from the triple bottom, I just want to show you, this is really, really interesting. And I wasn't sure if this was going to work out and sort of repeat itself, because these fractals are really just toys in the end, I suppose. But look at what happened here. Now I can zoom in. They're just things to play around with and have fun with, really. There's the triple bottom on that previous move down. That occurred in 2020. So this is 4 years later, 2020, triple bottom, that's these red lines, move up, and a pullback down to the 78.6. Look what happened in 2020. Move up, pull back to the 78.6, and then a bounce. Exactly the same pattern, triple bottom, move up, pull back to the 78.6, and then a move up with a gap somewhere along the way. Slightly different timing with the contracts. That's why it's not exactly the same shape. But really interesting, we repeated exactly that. So not only do we have historical precedents and case law for this sort of thing to happen, we've also got to close above all of those levels. 2.25 was the number. We closed above it on a 4-hour, daily, weekly, etc. And if we keep going for another 22 days, we'll close above it on a monthly chart too.